All right, let's get it started. 1 second, let me, okay. All right, good evening, everyone. It's December 28th. It's Tuesday. Bit of a choppier day in the market, but through review, we're going to be able to see how you could have possibly improved your trading, especially on days that we experience chop. So if we just go through, I just wanted to take note on something and speak about. I spoke about this last night, but one of Mark Douglas's analogies about being bit by a dog. So if you're trading and you experience a pretty bad day, or if you're around a dog and you get bit by a dog and it's your first impression, and right, logically you might think that all dogs are going to bite you, right? So take away from that and think about that, right? Because that's not statistically true, right? Most dogs are not going to bite you, and most days, just because you had a certain experience in the market, are not going to be like this. So you shouldn't be fearful and not let that anxiety carry over into multiple or future sessions. So I just wanted to talk about this range, right? So what is that? About a 0.9% range, but for the first half of the day, about a 0.7% range, right? So very small range. Typically, we trade between 1 to 1.5%, but this was a very long and extended move with lots of chop, right? Chop meaning lots of pivots back and forth. So we see a trend like this compared to, the day prior, where it's been in a very clear uptrend. Also the day prior, right? Fairly simple uptrend. Once again, and once again, right? And then there's this fifth day where we had a pretty substantial chop, right? I remember trading this very clearly, and I think on the 10-minute chart on this day, it was absolutely insane just watching it chop back and forth. But one way to kind of understand trading chop, right, is just noting your overall range or the pivots for the microtrend. So, I would have marked this first green candle, right, like so, and then the low right off of open. Okay, so you're fighting within this channel here. Support and resistance is great, but it's also much more beneficial to be able to draw a supply or a demand zone. How you could have done this on this day, right, from the upper wick here up to this top of this base wick, even maybe this red wick right there, right? So these two candles right there would have allowed you to form a zone, and then this open bottoming wick there would have allowed you to open a zone. So when people trade through chop, they typically are experiencing a lot of euphoria and impatience. And when you go through that and experience that, you're not thinking very clearly, right? So if you find yourself through your review marking your buys and sells, and you see majority of your buys and sells, within the middle of this range, right, this no man's land area, you're trading incorrectly, I would say. Now, if you're scalping and you can manage that, then that's completely fine. But being able to be patient and let price come to you, and enacting upon that interaction of a zone or a low risk kind of entry, that's what's going to push you further as a trader. So I can see here two clear levels to go short and long. Now, whether or not you hit every short or long pivot, you should have entered at least on maybe the top side, right? This is a supply zone or this demand zone, right? And a demand zone is just an area where buyers are harbored, and supply is just where sellers are harbored, right? So that's just a quick example. You have to understand or know how to trade these chop days and at least adapt to them, because through adaptation, we know that we can't trade the same setups and strategies and rules every single day, right? Every single day in the market, there's different participants in the market, and it's a completely unique experience. So, right, understanding that not every day is going to be a very strong kind of simple trend, but knowing that when a range day, right, within a small choppy trend day occurs, how to adapt to that, right? We should be having smaller size, being more patient, not really taking too many things with too much haste, and letting price form itself out. So moving forward here, all right, we've been used to these. If we look here on the daily really quick, some key things that I always look at always in the morning is the daily and how it's been interacting most recently. So if we can see here for the better half of 2 months now, we've been chopping around, right? Just trading within this kind of range compared to when the Qs, they typically like, this is from October to November, so about a month of an uptrend. And then this is from September to October, right? About a month of a downtrend, a bearish trend, right? So typically we like to trend choosing a one direction and having some pullbacks in between, but this is much more drastic, especially influence due to being, close to the end of the year. So we've noticed that this whole kind of demand or supply zone has been holding us down, but we seemingly just went through this zone yesterday on Monday and blew through it, right? Broke it, and this looks just like a retest of this daily resistance level. I think Dowdy Dimps in the group was mentioning that last night, or not last night, but earlier today. And it's a break and base, which was a great point. Buyers not letting it close under that 401 level, and with having 5 green days, consecutive green days, right, there needed to be some sense of a pullback to allow some breathing to occur and accumulation, right? So but going through, I just want to walk through this kind of review. I went through this morning. Where's it at on QQQ? Let's see. Yeah, so this was what we had this morning, right? You guys can see this. We had this morning. I always mark previous day low, previous day high, pre-market high, and pre-market low. And any kind of demand zone or supply zone that I can get towards the end of the day, I typically, anything that can stand out to me. So, going through, I'll just recreate that. We don't have to do all the colors and stuff, but at pre-market low is right here. Pre-market high, which if I look back, you can still consider this a rather respected level. There was a reason why this rejected and for the spill off. So we can see prior to open, it is dipping down. I normally like a dip down into open, and we did go long off of this base just due to the plans. That's what I mean, the risk was rather low, from this general area down to this demand zone that we had labeled. And it wasn't a bad move. It popped up, but it didn't maintain. All we kept seeing was, through our VPA, large upper rejection wicks, the 20 above the 9, right, showing a bearish kind of signal, and rejecting off VWAP here. Really not spending too much time over VWAP. I think that's a huge factor that a lot of people kind of, misunderstand when trading VWAP. They can look at it like either support or resistance, which is completely fine, but also digging a little bit deeper and looking at how much time was spent over that. So if I go out here to the 15-minute, just looking at the overall day, I want you to look at, how much time was spent over VWAP and what kind of price action was displayed when the time was spent over VWAP, right? And going through here, I'm seeing tons of large upper rejection wicks. No candle truly closing above this, and if it does, there's already a large kind of selling signal. And then the rest of the day, right, we're spending majority of our time under VWAP here. So that should tell you, right, under VWAP is bearish and over VWAP being bullish. But knowing that, trading off of the open, we're not maintaining being above VWAP. This is on the 15-minute, but the 9 crossing below the 20, right? That's a sell signal. If I go here on the 5, which is something that's a very common time frame for a lot of traders, right, we can see that the 9 crossed below the 20 here very early on in pre-market, about 8:15 Eastern Standard Time. So, and once that occurred, we did not see it cross back over, right, until very, towards the very end of the day. But the rest of the day on the 5-minute chart, the 20 was above the 9, right here, right at open at 9:30, at 10:30 still. There was no reason for you to flip to a bullish sentiment unless you're getting these scalps, right? Understanding that on every big shove down, buyers are not, being taken, lightly, right? they're buying this up with a significant push, not making it an easy short or an easy long, right? Like the day prior, or rather simple long. Whereas going short on this, even if you got a decent entry on a short, it would have popped back up close to break even, right, from gaining a significant profit. And so adjusting to trading chop. I have some notes here. I will answer that question, but I'm just gonna mark some things out, make sure you guys are taking notes, or at least trying to. I have avoiding the middle, right? No man's land. We covered that. Only trading within zones if it is choppy. Identifying the current channel, whether it be on a macro or micro trend. The 9 and 20 EMA confirmation on multiple time frames. So, what's displayed here on, let's say, I know a lot of you guys use the 1, but what's displayed here on the 1 may not read the same as another time frame. But we can see here that even on the 1, majority of the time, the 20 is above the 9. Even when we cross over, we should have that confirmation. Just because the 1 minute crosses over, this is the most common time frame where you will get crosses, but make sure, the 5 and the 10 minute are very significant for a true kind of signal flip or sentiment change. So, looking at your EMAs on multiple time frames, as well as focusing on one sentiment. Newer traders, I really would recommend to trading on one side, whether it be bullish or bearish. Now, it doesn't mean that, everyone wants to come into the market and buy a contract and hold it all day. It's a simple form of trading, but sounds much better on paper, right? So, that's not always going to happen, right? When we have nice trend days, that is a possibility, but not every day is going to be like that. Remember, this was if I go back here, this trend up there, that was 1.16% already, and then towards the very end of the day, right, it closed 1.34. So, but with the price action display through the candles, it was very clean, okay, compared to today. Even though that it was somewhat of a bearish trend. I wouldn't say somewhat, but somewhat of a clearly bearish trend. Trading it live, it didn't really feel that way, and the range was rather stagnant, right? Only 0.9% from the max range, from the top to bottom. So, adjusting to trading the chop, right? How do I know it's going to be choppy? Someone asked. So, going into each trading session, you never truly know. The only way that you can know is, just watching price action form out in front of you. So the 5 minute, like I was saying, is a rather common time frame, but watching the kind of message that these candles are going to display, right? There's a lot of big, upper and lower wicks here throughout the entire day. Right, even up until about 10:30. 10:30, you can get a good gauge of what the sentiment is, kind of leaning towards. Compared to, look at this previous day, right? There is some chop here on a pullback that's rather normal, right? An imbalance, or a balance between buyers and sellers until buyers take over this, right? We start to close over into these wicks, but for the most part, seeing a strong bullish sentiment here, bullish volume sustaining and holding this trend up. Compared to, right, this first 30 minutes right there, this very volatile action, this told you a lot, especially this big bearish engulfing, and then the big bullish engulfings, right? So just getting caught in the whipsaw, you'll know trading. If you are someone who can't resist from trading off the open, right, you'll get a very quick and clear understanding of if the trend is choppy just by trading it and experiencing that. So even if we went long right here, normally an add in demand is something that you can hold on to, or rather a respectable entry, right? And it pops up, but instantly, okay, hey, we're green, that was a good trade, right? You should be scaling out, of course, on any kind of momentum to the upside, but a big push down after that took away gains and turned anyone who bought this dip red, right? So and then if you stopped out, it ripped right in front of you. So just experiencing that, right, seeing the volatility live and unfold in front of you, that's going to allow you to understand if it's choppy. I don't think anyone should be overstepping and oversizing 30 minutes to an hour after open. If you find yourself digging out of a red hole every single day, then I feel like you're being too eager and yearning for profit too much, and not really taking trading serious in the fact that you should be trading to put on good trades rather than trying to get early. Roboto put out a great tweet talking about a bearish trend, and on a bearish trend you don't have to get the first shove down, right? But watch for the lower high confirmation. And I want to go through this. I'll put them all back here, but one of the most basic concepts, and one of my first concepts of learning how to trade was it was in PJ Selections and Atlas, and it was I forgot the guy's name, but he was talking about pivot points, right, on a microtrend, or just an overall trend. So and these pivot points will just be the top, just where price had reversed. So I'm just going to go through every top here. Right, I've probably done this lesson so many times, but I mean, it's great to reiterate it. But also, a lot of people don't look at price this way, and this is all that I really look at every single day, right? We can see here that, we are getting bullish pushes up, right? But we're not seeing that strong confirmation, right? A confirmation would be a higher high, right? And just throughout this whole day, right? We can see this very clearly now in hindsight, but you could see it very clearly as well intraday had you marked all of your pivots along the way. So you can see that this created a lower low, this created a lower low, right? So pretty strong trend there. It comes close to that, so this may have thrown you off. So if you do get a higher low and you feel like that this could reverse, right, you have to have a higher high. Because just because you have the first higher low confirmation doesn't mean anything until that downtrend break is broken, right, and succeeded. So higher low, but on the next push up, what happens? You get a lower high and then a lower low. It breaks that most recent higher low. So the bullish sentiment is taken away, right? There's some buyer exhaustion going on there, right? What happens? Another lower low, and you mark this low, right? And then this is how you can find a reversal. Okay. Obviously you can use your EMAs for reversal, watching the 9 cross over the 20, but if you want to get a little bit earlier, right, you can see that, hey, a higher high is starting to occur. We're getting higher lows consecutively, right? Keep pushing up here, and we're getting higher highs, right, on the microtrend. We start to see a sentiment flip right towards the end of the day. Right, you guys can see that very clearly now, and I know that's a lot of lines. It's a rather simple kind of strategy to look at, especially charting intraday if you're unsure of the current trend. If you're getting lower highs and lower lows, it's bearish. I'm very, very clearly bearish, right? If you're getting higher lows and higher highs, you have a bullish trend, right? Just like the day prior, right? Higher high, higher low, higher high, higher low, higher high, higher low, right, and so on and so forth. So if you can identify that it has been choppy, right, going through just off of the open, I'll clear these out. But I like to look at another tool that I've learned from Ken Trades, right, and that's the open range break, open range bar, whatever you guys want to call it. But you just go on your 30-minute chart and you mark your high and low, right? And typically what you want to see is, for a trend kind of confirmation, is seeing the either the low or the high being broken and based upon. So this was, like we talked about, a choppy day, but overall lower highs being consecutively put in on the chart, right? The 9 shoving down and holding price action below and not spending a lot of time on review up, right? So there's that bearish sentiment, but we're still getting these pops up. So really what you want to see here, right, is a strong close below the open range low to signify a strong trend, right? As soon as we get this candle closing below the open range bar, open range break, that's when buyers start to let it go a little bit. So you can still see that they're still holding it up, and there was a great buying presence all day, and that was the reason for the chop. because if they were to just let it go, if buyers were just going to be, absorbed, then it would have been a much more clear kind of trend day, maybe a 2% day or something like that. So, using this open range, we can look at it on another perspective here. Look like the day prior, the same time frame, 30-minute chart, open range bar. What happens here? You break above it. It bases here on VWAG, noted by the bottoming wick, right? Buyer stepped in, and you could say that it used previous supply as demand, and very strong reaction, right? We'll go to the next day prior, right? Looks very similar, right? A 30-minute. Right, everyone can wait 30 minutes, I hope so, right? It breaks above, it bases right there on VWAP, large bullish reaction, right? Day prior, let's go through this again. 30-minute open range bar. We'll mark this throughout the rest of the day to show the significance. So you chop through, I would call this a 3-bar play, right? But remember, over that supply, this top wick here, you're looking for buyers to close a candle above it, and noting how much time is spent under VWAP. On the 30-minute chart, even the 15, it'd show you that buyers were stepping in here, noted by these lower wicks, and not letting any candles close above or close below it. So, yo, what's up, Kimchi? Is that Kimchi Kevin? So this is one instance, right, that I really want to talk about, is not using the same strategy over and over. Now, it's not to say that you can't use the same strategy, but knowing when that strategy is being respected or valued within the trend. So, right, we just talked about, and I've showed you the 30-minute open range bar, right? But what about, this day? Right? Hold on. Right? So it closes below, and you get a nice upper price rejection, right? A base, break and base. But always gauge your VPA. So just because it is a bearish trend, okay, I'll zoom out a little bit here. Just because it is a bearish trend, it's been in an uptrend, okay? This is a major higher, this is that previous low. So on a macro trend, that major trend, right, this would be a higher low respect here. So it's still maintaining its bullishness. I would say that this is about a mid candle as well, from this peak to that peak, right? Yep, look at that. The 50 and 61.8, I typically look at that as a demand zone, and kind of a loose, loosely regarded demand zone, but an area of pretty strong confluence in most cases. But you see that, right? I just drew from the base of this pivot to the high here, and once it starts to pull back, you can try to gauge when it starts to hold, right? But going through VPA, if it's going to be a strong break, you're going to see consecutive lower highs and lower lows candle by candle, right? But what happens here, you get this bottoming wick, as well as where buyers absorb, where they're not letting any orders close below into this wick, right? They've moved their bid up there, and they're absorbing everything under this price here, which is 380.68. So going through here, we can see that it rejects off of this, right? So just because you use the open range break every single day or whatever else, right, it does not mean that it will always be successful. Just like the 9 and 20 EMAs won't always be successful, or you may not find a supply and demand zone respect just because they're subjective. Anything like that, always be open to the fact that this may fail, this may be wrong, being open to the chance of probability while trading, right? If you can take away the frustration and feeling of like, hey, I was right? I did everything right and it didn't go in my way. Man, I mean, welcome to trading, right? You can do everything right, you can chart out everything right, but at the end of the day, right, it's not all that you need. Okay, you can be a master chartist, whatever, and still not be profitable, or still not understand, why you were wrong in the market, simply due to the fact that, maybe it's a, emotional control problem, or it may be, just a lack of understanding of, probability. I know coming into the market that I should be open and, unbiased to any situation that is presented to me, because at the end of the day, right, I just have to align myself with what trend is, being formed overall. So let me catch up on the chat here a little bit. A good daily percent goal, aim for 1% on your account a day. If you can't make 1% on your account a day, then you have to grind yourself up to achieve that, right? 1% on the account is not difficult. If you have, a $5,000 account, make 50 bucks. If you can't make 50 bucks trading, then you have to understand that, maybe your edge isn't very strong, or you don't have a strong set of rules or obedience to yourself. But always start off with achievable goals. 1% a day, being able to compound, is a great goal to set, and it allows you to actually learn how to put on good trades rather than focusing on making money, which is most retail traders' downfall. I'm just catching up. No, 1% is not too little. Yep. Yeah, I was about to say that. Yep, just like Jupiter said, 1% over 2 years will, through compounding, through statistics, right, you technically would be a millionaire. And I think it was like not just a millionaire, but I think like a couple million, right? I think after a year of trading 1% a day, I think it's like close to 100K a year or something like that. So you just focus on taking good trades. I mean, that's the best advice that I could give to anyone, because so many of us want to come into a trade oversized. The trade goes against us. We don't know how to react, right? There's that paralysis analysis, and then you get stuck in the trade. You take a huge unnecessary loss, and you're not only taking a loss from your capital, but taking a shot at your your kind of mental health in regards to trading, right? Running back to that dog bite analogy from Mark Douglas. Yeah, you don't even have to stress out, right? You guys will see me trading in the Discord. I'll say this, right? I'll sell, I'll lock in profit, and I'll say, if it runs another 5 points, 10 points ahead of me, I don't care, right? Because I know if it does run another 5 or 10 points ahead of me, then there's going to be an opportunity to get in. There's always an opportunity to get in. I mean, I could show you on every single chart the last 20 days, multiple entries where you can get in, right? And through the 9 and 20 EMA, right? 3 minute. Look at the 9 taps. 9 tap, right? 9 tap, 9 tap, right? These are multiple entries. Go here, right? 9 tap, 9 tap. 20 is not being broken. Multiple entries, right? If the 20 does start to break, look at your 5. Okay, that doesn't mean instantly stop out, but look at this day right there, right? Where someone would have stopped out was a very prime buying opportunity for those 5-minute EMA traders. Would I say that I disagree with Mark Douglas on some things? Of course, right? I disagree with a lot of people on a lot of things. I think that it's great to challenge other mindsets, but not to be stubborn, right? Some things that I may not agree on, I should understand that it's just my opinion, and it's also his opinion. And everyone's circumstances are very different. Everyone goes through different kinds of trends and experiences through trading just in general, and my kind of journey is not going to be mapped out or similar to your journey, and neither was it for Mark's. So plenty of things to kind of discuss or debate about, but the bottom line is that remaining unbiased. I know, I even teach, right? I teach every single day, and some people may not agree or understand my point of view, and that's completely fine. It's nothing to get upset about. It's nothing to argue about. It's just simply, an indifference in perspective. So let me look at some notes that I have here. Oh, scalp or long, right? So if it is choppy, this hold kind of coming back from the holiday break, right, Christmas and everything, I have not been trading full size. I'm trading quarter to half size, really, allowing, the market to choose a direction and kind of, get out its accumulation and consolidation phases rather than putting myself in front of everyone and being able to reflect on the price action rather than being predictive, right? Being able to react, and I don't have to be first. I know that if it's a bearish trend, look how many opportunities it allowed you today. Every single pop up was a short opportunity for a lower high, right? We already went through this, right? All the higher lows, or all the lower highs, excuse me, right? Multiple opportunities today. You might sit back there and think like, damn, why did I take the trades that I did? Why did I go long and not sell for profit or this or that? It's so crucial and so important for all of you to be able to go through, have a completely bare chart, and go through your order log and mark where you bought and sold. So, if you went through and you see that you're going long after seeing a big green candle every single time, right? You're seeing that very often, and it's turning you into a red trader, or you're having pretty poor experiences while trading that method, then stop, right? You have to be able to learn from yourself. A lot of things that traders will do is they'll have a problem and they'll learn another strategy, right? And they're never focusing on that kind of signifying problem that is detrimental to their trading kind of journey and strategy. So, I mean, what have we talked about, right? Not buying in the middle. Without there being, I can draw a demand zone here, sure. I'll draw a demand. We'll draw a supply zone off this wick here. Right, this is only 15 minutes after open, so you have some sense of a zone. This does come back a bit deeper, right? I could probably draw, a zone like so. Something like that, but right, if you find yourself and you bought within this range right here, right, there's something to that needs to be tweaked and reviewed in your trading every night. I cannot stress how important it is to go through and review trades. I was talking, I think, with who was it? I think it was Queen in the Discord, but saying how crucial it is for prop traders and why it's mandatory for them to review and journal their trades, because right, you're trading with someone else's money, and yeah, it is controlled. I think it's pretty much really relatively low risk to them, but for the long haul, you have to keep a trader in the seat to make money, right? For them to make money for you. So it's only in benefit to them, or to the trader, to become better so that they can become a more profitable trader. I can't just go in day out and be like, hey, I know what I did wrong. I was chasing. I don't really care to know why or where I was chasing, but I know that's a problem. It's right. It's not constructive. It's not going to fix anything. Let me see. Covered orb. So a big problem people are having is FOMO and FOMO with entries. So that's at the top of the list, and we'll clear this once again. But I don't know if anyone's really ever talked about this, but just like anything, right? There's a tempo and a timing to things, right? In sports, there's timing. In music, there's timing, right? There's a tempo. And being able to be in tune with the dialogue that's at hand, right? The trend that is forming is very crucial in the fact that, if you get off step or off beat, you'll get punished, and you'll get punished rather quickly. It happens. Even on a day like today, it happens rather quickly. So, FOMO, right? Fear of missing out. It's the kind of intrinsic, provoked kind of haphazard trade that you do subconsciously, right? You just enter into the trade because you don't want to miss out on it, right? It's trending. It's like, okay, well, I want to make money. Everyone else is making money, and I'm late to the party, right? So I'll go through this example rather quickly. I know a lot of people have already gone through this, but it's a great refresher, especially on a day like today. I feel like it's really important to understand, the faults that had happened on a day like today when it was somewhat difficult and not as simple as those previous days. So let's say that, you don't take anything off of open, you're being patient, but then you see these big bearish kind of engulfing candles here and you FOMO in the short, right? We know that we should be shorting on upticks, right, for a potential lower high. And we know that we should be going long on downticks, okay? So you go short, you're green for a little bit, it pops up, stops you out, right? You get stopped out right there, okay? You get stopped out. What happens? You get a green candle. Oh, I was wrong on that. That was a dip. So now we're flipping long, right? So I go long right here just because I see a big green bullish engulfing candle. And what happens right after, right? Big bearish engulfing candle. Well, damn, I messed up. Now I have taken two rather large losses. I was right the first time. I'm going to go short again. Okay, you go short, you're green for a little bit. What happens? Same thing happens to you. And then people go back and forth trading that revenge, euphoria trading, trying to force themselves into the market, right? They go long, right? They're like, okay, go long, you're green a little bit. What happens? Big bearish trend. And they do it every single day. If that's something that you find yourself doing and probably experience after market open, or even you experience it not only after market open today, but in most cases, then right, you need to be able to be patient and zoom out, right? Always look at your larger time frames. If you don't, the 10 is a great kind of start. I really like the 15, but just noticing where and why price is reversing where it does, right? So I know people want to be thrown into a trade and being locked into a trade simply due to that kind of fear of missing their entry or something like that. But letting price come to you and sticking to the logic that I should only be shorting large upticks and going long on downticks, right? That if you had stuck to that kind of plan or that kind of mantra all day, then you would have fared fairly well, right? Because all day, every time it shoved down, you get a nice bullish reaction. Every time I had a nice bullish reaction, big shove down, bullish reaction. Rinse and repeat. Yeah, take it easy, Grandpa Goat. And entries. I have written down here. Entries. Identifying entries, that's one thing, right? But trusting yourself to take that entry, that's a totally different animal to kind of encapsulate and conquer. So newer traders most of the time have the right idea when finding an entry or thinking or knowing when it's a good spot to enter, but they lack the trust in themselves, the confidence in order to enact upon those entries. So, and when that happens, right, that whole scenario of getting off tempo, being late to your entries, right, I would rather be a little bit early on the downtick and have a lower risk down here than FOMOing into entries because I missed my entry that I was like, oh, well, that's, going to probably reverse because that's what happened last time. All right, and what happens the next time? It shoves down, right? Reversal. What happens the next time it shoves down, right? Every time it shoves down, buyers are going to have some sense of a reaction, and short sellers have to buy in order to cover. A seller is just a buyer waiting to happen, and a buyer is just a seller waiting to happen, okay? I also have written down here, let me see. So tying back in with what happened on the daily, a lot of you guys, like especially in the poll, right, in the daily poll in the channel, were very green, right, because the trading was simple. It was something that where our edge was defined, riding the 920 EMAs, holding gains for a bit longer, and that was very evidently displayed. And I'm sure a lot of you guys wiped out possibly half or maybe all of those gains in one day, right? Because the overconfidence and the lack of obedience of your rules and strategies had dissipated due to the fact that, we had a very strong and confident bullish rally here. Okay, so That's something that you really need to be able to prevent. Making matters worse, if you do take a tag and it's not a loss that you're used to, just because the last 5 days or last few days were relatively green and simple for you, right? Take a step back, right? Size down, wait until you can find your footing, instead of trying to, prove yourself to the market, right? There's no reason to be like, hey, I'm gonna walk away and I'm gonna show them I'm gonna make a lot of money from the market, right? Who cares, right? I don't really care, right? All I really care about is trading correctly, because I know in the long run, if I take and continuously take trades that are planned well and executed well, then I can do this the rest of my life. It doesn't matter about making a home run trade here or there, right? The anomaly is great and it's fun and all. It's something to, screenshot and I don't know, just be happy about. But someone made also a great post. I forgot who it was, but it said, great trading is boring, right? Because it's consistent, it's systematic. And degenerate trading or risky trading is fun, but very, very detrimental and volatile on the account. I have something written here that I wrote in Atlas a long time ago, back in December of last year. But I said, look at taking an entry as merging into traffic, right? You may be in a rush, but you would not merge into oncoming traffic. Otherwise, you'd take a hit, right? You would be going long into a momentum trade. Enter at a dip, a pullback, trendline touch, etc. Patience is key. Execute with precision and have an exit plan. This is a game of longevity, and your account can only handle so many FOMO buys, right? I wrote that a year ago, and it's still true to this day. It's still something that I would stand by and mention and preach to people every single day, because the patience in the market, right? Removing the euphoric kind of, provocation when taking an entry. If you can take that away from your trading, right? Trading begins to be very calm, and you look at it, less from a high speed kind of, development process to it, letting it, showing you where it's starting to pivot, and, trading that momentum and knowing when it does spike up rather hard that you're late to the move. And if you're late to the move, right, later entries dictate quicker profit taking. Shiny said, did you switch from the 1 minute to the 5 minute, or how do you know which time frame to follow? I always flip through my 1, 3, and 5 and 10. So, on a day like today, my EMAs on the 1 minute didn't really do too much for me, right? On the overall trend, they didn't really do too much. So maybe on a microtrend on the scalp, like this big shove down was a pretty strong move for us. But going on the 3 gives me a little bit better of an idea of the overall trend, but doesn't help me. Maybe it helps me like on those micro trends like I talked about, right? See, the 9 EMA taps are good short opportunities. But if I'm looking at bigger picture trend, right, if I want to focus on taking those lower high shorts and trading with the big money, I need to be looking at the larger time frame. So I like looking at the 10, right? And if we look at the 10 here, right, the 20 EMA all day, this was brought up to me by a member in the house of Stacks. 20 EMA all day was rather respected, but very closely the 9 as well, right? Taking a short on the 9 was not a bad idea, pretty much all day, up until about 2 o'clock. So always flip through multiple time frames. You guys cannot be stuck on 1 or even 2 time frames. I look at probably 6, right? That's the 1 minute, 3 minute, 5 minute, 10 minute, 15, 30 minute, 1 hour, 4 hour in the daily, right? That's more. And so really, expand your horizon, expand your comfort zone. If you're stuck trading the 1 and the 5 minute, you're not going to make it, in the long run, right? You have to be able to understand. It's fine to gather entries and stuff, but, looking at this 30-minute chart, this will give you much more clear and strong candles rather than, a 5-minute chart or a 1 minute. A 1 minute chart is great and all for scalps, and especially, newer momentum or, big push on rallies, but it's also every minute is something that you reflect upon, right? It's data that you take in and that you consider when thinking about your thesis. Would I be able to review a firm today? Sure. I think I charted this out, but I didn't trade it. Yeah, someone was asking about it in the chat. So, this was what happened here. So this was that daily downtrend break, but we can see here very clearly, right? I think I'd probably do this on the 5. That's what I was on this morning. You can see here very clearly, large upper rejection wick in pre-market. It rejects. Lots of chop here, right? You see this chop here on the 5-minute. Go on your larger time frame. Let's look at the 15. Right, you can see very clearly here that the 9 crosses below the 20. The 20 is shaving off all of those, attempts for a bullish push, and you're getting consecutive lower high, lower high, lower high, lower high, lower high, right? It goes on and on and on, right? Look at the candles, guys. Look at how those shorts are moving their ask down, okay? They keep moving their ask down, and they keep absorbing those bidders, right? They keep getting shoved down and dwindle away. So, also looking at some key points here, right? Pre-market low crumbles. This demand zone gets broken through. The VWAP is broken through. Being shoved down. I like the 200 EMA on the 5-minute, but right off of the open, they're trying to hold it, but as soon as it breaks down, it bases, right? It shoves down and pushes up, confirms that retest noted by that large upper wick, and then it ensues a very strong trend. And if you miss this whole trend, right, you can get in. I bet the 3-minute provides entries. It sure does. Right, if you miss trading all of this, I mean, for me, I didn't trade it, but it looks like a pretty clear kind of flag breaks, bear flag breaks to the downside. You can short every 9 EMA tap, right? Boom, boom, right? And then some people get caught into trouble here. Remember, if this does pop up, you need a major trend higher high. You don't get it. There's a supply respect. Also looking at your 5-minute EMA, right? What happens on your 5-minute, right? You can't be stuck. If you're trading EMAs, you can't be stuck on one time frame. You have to zoom out, right? Look at the 5-minute EMA. This was a prime entry for 5-minute EMA users, or people who are very versatile trading the EMAs. Prime entry for a short. Look at the reaction, right? 102.35 all the way down to 99.96. So almost a 2.5 point move there. Very strong on the contracts. Depending upon the open interest, I would have displayed a rather significant move, something pretty beneficial, I'd say. I took calls on QQQ today on that hammer candle off of VWAP, thinking that we were going to that we were getting a series of lower highs. Then got wrecked a few minutes later. Is there anything there that you see that's a red flag that would have made you cut your position? And is that a good spot for an entry? And it was just a play that didn't work out. Okay. So you said here at 10 o'clock. You said you took hammer candle off VWAP. Oh, hold on. What time frame? Oh, the 1 minute. Okay. Oh, you went long here. Is that what you're saying? Yeah, you took calls today. A series of lower highs. I mean, that's signifying a bearish trend, right? But remember, a lot of people like to just, maybe draw an ascending trend line even, which would have, been able to stop you out. I think that was the reason for a big pullback. Depending on your entry, if you are extended up here and there is a lot of chop, I would keep my entry or, kind of stop out. This is a nice, pretty strong horizontal level. That was a prime area to stop out. Also, if VWAP were to crumble, that was a nice stop out. So always, before you take any trade, you should have a defined area where you will stop out. And if you can't trust yourself to do so, You know, I would trade small size until you practice that and incorporate that into your trading kind of strategy. Do I only trade options on large caps or commons as well? When you short large caps, are you buying puts? So I only trade options on large caps, especially if I say I'm going short, I'm just buying puts. It's a very fun way, but also a very volatile way to make higher percent gains, and looking for something that's very liquid, where I can get in and out with rather small slippage. Breaking base on VWAP, right? So you can think that, and that's fine, but always remember you can't use your EMAs completely, and the EMAs aren't really helping you here too much. You're getting a higher low, higher high kind of put, but the main thing is holding for a higher low to be maintained, or this trend line being held. Also, right, if you break above VWAP and it was a base, if this pushes through, it's no longer a base, right? It gets negated, right? There's a lot of weakness here. And if it does base on the next push up, you should have seen a higher high, right? You should have seen it push up and make a higher high. Yeah, for sure. Let me see what else I have here. I think that's pretty much it. Yeah. If you guys have any questions, we'll tie those in, and we'll wrap this thing up. But I really want everyone to be able to display patience and practice patience, moving forward into the market, right? There's no reason to get ahead of ourselves, right? We're about to start a whole new year, and there's no reason that we should be starting off the year bringing in the same kind of poor habits that we experience or keep committing to each in every trading session. So in the Patreon, I've seen a great deal of progress, and I say that quite often, but I mean, it's really just astounding seeing the progress from a lot of traders who I've talked to or have heard their stories in regards to their struggles, and their experiences in the stock market, and the adaptation, right, that a lot of you guys have been taking on options. A lot of you guys are newer traders to options, and being able to pass that learning curve and put behind any kind of strategy or sector that you were trading that maybe wasn't working for you, right? There's no reason to say that you are destined to be a small cap trader or destined to be a certain commons trader or whatever else, right? Always dip your feet in other instances or other experiences in the market that maybe you thought once were too difficult or too complex, right? I used to think options were too complex or too risky, but now that I trade them every day, it's literally the same thing, right? I'm just using less capital. Black Reno says, can I get your can I check out Walmart? Saul says first. Sorry. Walmart, we'll go here on the daily. Walmart, right, it's been trading between these two ranges here, right? This major supply and this major demand. I am seeing higher lows consecutively, and then this kind of shorts harboring, right? They've held this supply and now they shoved it down. If we do get another push up, I would be looking for the interaction over 145. But most recently, right, there's this large upper wick that we have to face through, and that a candle didn't even close above it. So I would be paying attention very closely to that. I feel like if SPY continues to make all-time highs and goes back on its trend, as well as QQQ and NASDAQ, bringing this, just the overall health of the market up, that we should reach this 150 area here soon. I do like Walmart. I enjoy trading it. It's a very clean trend. I traded with this today and was able to just ride the trend, right? Taking entries on the 9 EMA taps and scaling out on those higher highs, right? And that's something you guys should be doing. whether or not you're trading one contract or multiple contracts, right? You should get into the habit of scaling out when a higher high is made, and consecutively doing that, right? Just locking in it and doing with what's consistent. Can I get your opinion on Tesla at the open? I noticed two big wicks that got stuffed at the 1 or 1116 key level, indicating strong sellers. Yep, two large upper wicks. This is what you're talking about, right? And these are lower highs, big strong rejections. And overall, rejection of that supply. And look at VWAG. How much time is spent above VWAG, right? Not a lot of time, which shows a strong rejection, and a lot of time being spent under VWAP, as well as this is on a 3-minute, right? The 20 is above the 9. That should very clearly tell you, what kind of trend is at hand. Until, right, what happens here? Buyers accumulate. They notice this downtrend break. You start to get higher lows consecutively. The support starts to bottom out, right? It starts to become horizontal. Horizontal supports are much stronger than diagonal supports, right? Something like this, right? So this horizontal support shows a bidder stepping up, holding that and pushing it up, taking out those sellers on this downtrend break. Is making a good rule not to trade for the first hour and just watch price action a good way to develop patience? I seem to be able to wait, but want to get right in at the end of my wait time. Is there something I can think about to curb the desire to jump in as soon as I allow myself to trade? You have to just be able to identify your A+ setup. Everyone asks what is an A+ setup. An A+ setup is what you are comfortable trading and something that you can continuously identify and consistently trade, right? I enjoy trading the 9 and the 20 EMAs in confluence with the 200 EMA and VWAP, as well as identifying my pivot points and my supply and demand zones, right? Using all of those to gather a clear thesis. And if that's not presented to me, at least 2 or 3 of those confirmations, then there's no trade. Don't force yourself to trade through chop. Just because your time limit's up, that doesn't mean that you should trade, right? That's not like, hey, I get to trade now, right? That's no better than when it's 9:30 and everyone has the ability to trade option. That's no better than, hey, it's 9:30, time to jump into a trade, right? And think about that, right? It's no better for you. So I would only take a trade if it's something that you have recognized through your review and your screen time, where you can understand and put yourself into an entry where there's relatively low risk. Can I share my watch list for options on Discord? I just trade the same ones every day, right? Facebook, QQQ, Tesla, AMD, Microsoft, Apple, Walmart, watch lists are great and all. Inside bars are fun, and I will trade them from time to time. But really understanding and finding a handful of tickers that you can comfortably trade every day. I log in every morning. I chart the same things. I trade the same things. I walk away profitable, right? So there's no reason to. I remember in small caps, I would have to hunt and try to find that gem of a trade. No longer am I doing that. No longer am I wasting time or energy on doing that. How do I use the 200? I like it on the 5-minute. 5-minute is a great gauge. I use it on NASDAQ as well. But normally, right, you see on Tesla, breaks, right? Tesla breaks the 200 EMA on the 5-minute. It bases, noted by this large upper wick here. This is a base, right, showing a confirmation. A large rejection to the downside, right? Once it comes up, it pushes through, rejects on the second attempt, pushes through, rejects, right? Third attempt, pushes, head and shoulders now, rejects, right? Left shoulder, head, right shoulder. Once again, pushes through, major trend, lower high, rejects, right? If I go here on QQQ, on this day, here, not super respected, right? But price pops up, respects there, it uses it to bounce. Now if you get a push through, right, a break and base below, you'll see a strong reaction. It wasn't as strong as of a break and base, but once it comes through, for it to overtake it and flip that sentiment, right, it needs to break up base, then you get a strong continuation, right? And on this day, you know, it was used as a major resistance point for these two levels here. You watch Carmine on YouTube, and he's preached the same thing you were saying about having a plan, having a strict stop out if the trade doesn't work out, having clear entry and clear exit where you're taking profit or stopping out because your thesis is wrong. However, I fear having death by 1,000 paper cuts. Is it normal to take paper cuts until you're taking strong setups? Sometimes even when I take a good trade, I take profits too early. Right, so just through review and experience, right, you're going to be able to hold on for longer, but the trade has to present itself to be able to hold on for longer. So, you know, if it's a range day where it's fighting within a channel or a box or a range, then you're not going to be able to hold on to that for very long. If it's a trend day, that's a different story. And if a trend day does appear, right, what was the confirmation? Break up, base on the 200 EMA and VWAG, 9 crosses over 20. Look at all the entries on the 9. 9 EMA tap, 200 EMA base, 9 EMA tap, here, 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 and here. I mean, so many entries and so many ways to be able to hold on, just simply being guided by your EMAs. Now, death by 1,000 paper cuts, right? You shouldn't have 1,000 paper cuts, really, because you should be aiming on taking quality trades rather than focusing on the quantity of trades. A trader, an options trader that I really look up to is Shark. Shark really takes 3 to 5 day trades a day, and you know he waits for his setups. My setups are not your setups, and your setups are not someone else's setups. It's really what you're comfortable trading and what you can wrap your mind around. But focus on taking less and focus on the quality of those trades. Remember, the quality is having multiple levels of confirmation, a level to base risk off of, right? If you're going short here, right? If you think to go short here because it's long push up, right? Where's your stop out? Right there. So if your stop out's right there, you should align your entry rather close to that, or even if you take an entry down there and if it pushes back up, you stop out, right? There's risk to be developed, right? If you have this level here and then this resistance up there, if you want to go long because you have a 9 EMA tap and it is trying to push through for a high a day break, you know, this may not go in your favor. But if it does, then you're in the green. But if it doesn't, right, where's your stop out? This support level right there. Always ask yourself and put yourself in a position where you will be able to have a stop out plan, because there's no reason. Unnecessary losses are due to the fact of people oversizing, and when you oversize, you don't respect your stop because you're not comfortable to trading that amount of size. Any reason I don't trade SPY? No reason whatsoever. It's something that I will kind of delve into a bit more. It's just, you know, I was focusing on QQQ and the tech stocks in there, learning their personalities, and I will add SPY to that. Finding a good way to scale out and profit and struggling to keep my winners bigger. Don't focus so much on keeping winners bigger, but focus on the quantity of winners, right? Due to the fact of focusing on the quality of trades. So, right, scale out on higher highs. There's nothing wrong with that, but use your 9 and the 20 EMA, right? You will have days like this where it is very beneficial to you, right? Not even, I mean, let's look at like Facebook. It's not just on the Qs, right? Look at Facebook, right? This is on the same time frame, 5 minute, 9 EMA, boom, boom, right? All throughout the day. And go here again, 9 EMA, 20 EMA, big flashing bar, negates this kind of push down, 9 EMA tap, another 9 EMA tap, very strong trend, okay? To the downside, 9 EMA tap, there's another one, and another, right? Great momentum. Remember, later entries dictate quicker profits, and you have to have a tight stop. If you're earlier on into the trade, you're able to hold on, but if you hesitate, that's why a lot of people want to hold on for longer, but they don't have the luxury of that due to the fact that their entries are late. I always ask myself, is the setup prior to this one a better, safer entry than the one that you're about to take? If it isn't, check trade then. Okay, yeah, that's a good comment. Hey, what's up, Huskers? Which shark did you say only takes 3 to 5? No, not Dr. Bull Shark, but shark trader. Yeah, and Dr. Bull Shark as well, right? He probably takes around the same trades, and someone I admire as well. You know, it's all about patience and precision, guys, right? There's no we're you know looking to take quality trades. Now, if there were an abundance of quality trades, then they wouldn't be quality trades, right? So there's an abundance of bad trades and choppy trades, and you can take those and they don't pan out well. But being able to, if it's short, right? If you take a short here, you're like, damn, that's a good short because we're about to break low of day, right? What happens? It flips on you. Then you're panicking. You might cut for a quick tag or small loss, and the thesis was correct, but your entry was poor, right? Wait for the uptick to occur. Watch the reaction to the uptick. So, not ready yet, but is there a way to calculate risk reward for options? Been using TradingView for a long position drawing for smalls. Yeah, I mean, I always, put myself into it a level where, the underlying is being displayed onto the options contract. So my key kind of stop out levels are on, key indicator breaks, key level breaks, stuff like that. So, but, I'm going to wrap it up here. I want to talk about the Patreon a little bit, right? It is the end of the month here now, the 28th. And the room's grown substantially, right? We've been doing a great job keeping up with the room and, the pre-market prep. You guys have noticed that most of the streams I, have strayed away from Twitch. I will come on Twitch occasionally, probably once a week for a live stream and once a week for an EDU session or something. But, I'm still very active in the Discord. After 8 a.m. every morning, I stay on about 4 to 6 hours. Today I stayed on until about 2 after getting on at 8:30. And, walk through commentary, answering questions, making call outs, and just, progressing day by day and along with everyone else. So, seeing great progress from a lot of members in the room, right? Every day you guys might see on Twitter, I know especially the members in the House of Stacks, but we this is what we do, right? We're all obviously honest with losses as well, right? But going through and seeing all of you guys making money and applying all of that knowledge through the lessons that we've talked about and that I have, pretty much 4 or 5 times a week. This helps you guys and very evidently helps you guys due to the fact that you guys are posting in there every day, especially during trading session hours. Most of the posts are in there are before 12 o'clock, and you guys are able to live your life and be able to, not be stuck at the desk all day, right? We trade for not only financial independence, but, leisure independence and living a higher quality of life. So, in January, I talked about obviously everyone who has been in the group, right, is staying within that grandfathered rate. And, I also got a lot of messages talking about people having expenses for Christmas and, not being able to, focus or budget that in, which is totally understandable. I'll probably, I'm not sure exactly what we'll do, but might just extend, just by a week or two for that kind of 2021 rate, just for, anyone who's interested in, joining our educational group, right? Everyone's very helpful. I spend a lot of time within the group, and I only didn't trade with you guys for like 2 hours today, and some other days, I get off at 12 or 1, but the goal for trading was never to sit at the desk all day, so I don't feel like that should be your guys' goal is either. So but right, great session tonight, guys. I feel like I covered a lot of problems, especially experienced through the chop that was presented to us today. And I'll catch everyone in the Patreon tomorrow morning right after 8. Of course, we'll go over pre-market prep, pick out, just chart our tickers, pick out contracts, be aware of NASDAQ and VIX and their relation to the market, as well as, watching SPY. So good work, everyone. I hope that this benefited you and helped you in some way. Tomorrow I have another live session, of course, but that one will just be within the Discord. So make sure you guys get some rest. Make sure you guys hydrate. I will catch everyone tomorrow morning. And remember, don't take the experience and the emotions that you had today and bring them into tomorrow. Even if you are very profitable, right? Quell that euphoria and, that ego, and be able to come to the market, level-headed and very unbiased. So, those are my key takeaways from the market today. I hope that you guys enjoyed this session, and I'll catch everyone tomorrow morning. You guys have a good night, and take care.